Hello and welcome to the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland. Today's panelists are Alan Bush, our Senior Financial Economist, and Mark Soderberg, our Senior Ag Market Specialist. Starting with Mark. Mark, what's your expectations for this afternoon's crop conditions report?
Seeing conditions improve the last 2 weeks, I look for modest declines of 1 to 2% in good to excellent for both corn and soybeans this week. With little to no rain over the western half of the Corn Belt in the past 7 days and temperatures began to surge, I think this will likely lead to a fairly significant drop in ratings here. Better rains were witnessed in the eastern Corn Belt in the past week, which should enable conditions to at least hold steady and in some cases look for some states to improve. So net, I'd expect to see a modest drop overall. I'd look for a much bigger drop next week with the forecast for this week for record high temperatures and little to no rain in the forecast. So this week we'll also get our firsthand reports from the field with the widely watched Pro Farmer Crop Tour.
All right, what impact will the late season heat wave have on this year's crops?
I think its impact will be mostly felt in soybeans. In corn, the most yield sensitive stage of development is pollination, which typically occurs in July. This week, we'll likely see that 75% of the crop has reached the dough stage, with roughly a third of the crop already dented. So this will be slightly at or slightly above expectations for this time of year. So the late season heat wave or flash drought will likely impact kernel fill in the corn, which I think will result in yield losses of no more than 1 to 2%. In soybeans, however, we're in that late pod stage filling stage of development, which is the most yield sensitive time frame. If this late season flash drought extends into September, I think it could have a significant impact on production moving forward. Historically, 2 years really jump out where late season heat and dryness did cut into production. In 2003, production fell 14% from the August estimate to the final production number. And in 1999, production fell 7.5% from the August estimate. So given that this year's late season drought is setting in a little bit later than these 2 years, I think production losses this year would only be limited to 5% at the most. However, a 5% reduction that would shave about 200 million bushels off this year's crop down to 4 billion, which would create a significant rationing chore for the market.
All right, Mark, and finally, do you think wheat prices have found a bottom?
Well, if they haven't, I don't think we'll undercut the recent lows or the spring lows by much. I've been stating that wheat will likely hold support above its spring low. So far, Kansas City has. Chicago spot September did trade briefly under the spring low, while December did hold above it. Globally, I just think there's just too much production risk with production in Canada, Australia, and India, all likely to be lower than their current estimates. There's chatter that India may be negotiating large imports of wheat from Russia. Well, it just seems like war premium has been nearly eliminated from the marketplace. So I just think there's a lot of risk in holding short positions in wheat right now. And the large speculative traders are still holding a rather sizable short position here in Chicago.
All right, thanks, Mark. Alan, what are the potentially market-moving economic reports for this week?
Okay, well, first of all, on Tuesday, we'll have the July existing home sales guessed at 4.16 million. Wednesday, the August Purchasing Managers Index for manufacturing, that's anticipated to be 48.8. And also on Wednesday, the July new home sales anticipated to be 702,000. And then finally on Friday, the August Consumer Sentiment Index guessed at 71.2.
All right. What will Fed Chairman Powell say when he speaks at the Jackson Hole Symposium this Friday?
Okay, so the Jackson Hole Symposium is an annual event. Many analysts believe Powell's comments will be hawkish on balance. This would be in keeping with his recent rhetoric. Also, the majority of Fed policymakers believe interest rates have not yet peaked as labor conditions remain tight and we have strong wage growth, increasing disposable income for households. So I would expect a hawkish comment from him. And that would be what we have been seeing in recent weeks from all of the Fed officials.
All right, and last question, Alan. What is the likely price direction for the interest rate futures market this week?
Okay, so in light of a hawkish Powell, I think we can see the interest rate futures markets continuing to decline. In fact, just today we had the 30-year Treasury bond futures falling to their lowest level since November of last year. So if I am right that his comments will be a bit on the aggressive side, and I think many traders are leery that that could be the case, that would indicate lower prices, even from these very low levels across the board in the interest rate market futures. And by the same token, I think the same logic can be used for the stock index futures. Anything hawkish from Powell, the anticipation of will, I think, have a very important negative impact on not just the interest rate futures markets, but probably on stock index futures as well this week.
All right, thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you would like more information about our brokerage services, please visit admis.com. Thank you.